My name's Paul Dowding. I'm co-founder and head of design for Alpha Core, and we've designed our own layer 1 protocol called Tapestry X. I've been an active member in the GBA for a little 3.5 years. When I first met Gerard in a presentation in New York, he said governments are notorious for being slow to adopt a new technology and notorious for being difficult to deal with. And with this new technology, blockchain, he was trying to help with that. And I thought that's something I could get behind. So I followed him and then joined when the conferences started. There's been impressive events. And since then, have attended many of them, as many as I can justify within our expense budget. He's also been gracious enough to offer me speaking engagements where we've worked together on different initiatives. I joined the Standards and Certifications group, which generated this blockchain maturity model. I joined the Banking and Financing group, and that led to me leading it now with this financial supplement. And as I'll say here later today, I'd encourage you, if you join the GBA, to join the working groups. But, although I'm an active voter, I don't know much about voting. But I thought it was an interesting use case, and it's certainly something that could benefit. So I joined the voting group as a layperson, and it's taught me a lot about the business, the voting. And so if you see these groups, don't necessarily think that you have to join as an expert. Please feel free to join to learn and also offer the perspective of the layperson. That's what I tried to do with the voting group. Anyway, today's presentation, let me share my screen. So our focus today is evaluating fintech blockchain solutions with the GBA blockchain maturity model. And what I'm going to cover is why the blockchain maturity, why is there a banking and finance supplement? We'll look at the blockchain maturity model, but that's just in very summary. That's not the main goal of this presentation. The main goal is to look at the banking and finance BMM supplement. And we'll look at, as an overview, we'll look at the use cases that we believe, allow for a broad spectrum of what you're going to be bringing solutions to, and then the requirements. And we'll explain the difference between what is the blockchain maturity model assessment and the supplement assessment process. And then we'll provide some more information and next steps, about how you want to proceed from here. And we'll open it up to questions and answers at the end. I'd ask that, because we've got a lot of ground to cover, and you'll see why when we get into the slides, I really am covering this at a summary level. There is a plan to have a full training session for this supplement, but this is really just an overview to give you a flavor of what we were trying to do and what we're trying to achieve, and how you can benefit as a solution provider, as a solution buyer, or just an interested person. So looking at the BMM, the blockchain maturity model, why was there a blockchain maturity model? Well, there's a plethora of blockchain solution types, public, private, different use cases all over the place. So how does a buyer, assess them? And how does a solution provider, articulate its own capabilities? And so the BMM was sort of born out of this idea of, regardless of the solution, can we provide an objective way through the GBA for these solutions to be assessed? And then why is there a financial supplement? Well, when you look at specific use cases, there's either specific requirements across these use cases which don't necessarily fall into the general categories of the blockchain maturity model. So again, we've got a plethora of these use cases, and we wanted to know how we could provide an additional support, because depending on where the blockchain is being implemented, there may or may not be different requirements that have to be met. And that's looking at the series of requirements applicable to some of the use cases. And this happens to be relevant. Our timing was not deliberate to coincide with various industry events and recent headlines. But if you look at a lot of the solutions, especially in the crypto DeFi world, could we possibly have known about some of the issues? And we believe, we would have seen certainly FTX as a centralized non-blockchain solution, which had various risks associated with it. But when you look at some of the other crypto and DeFi protocols, you find that they're more centrally controlled than they appear to be at first. And those are sort of things that we look at when we're doing these assessments and reviews. So it's timely that it's here. And we're hoping that through the assessment process, we can the GBA can help the industry show sort of best practices and make a viable assessment. So looking at the BMM, the blockchain maturity model, the solutions are assessed on 5 layers, and this is the blockchain maturity model at the sort of higher level. So you're either an initial use case where you've got some portion of the element documented and implemented. You're just really at the start of your process, but you want some form of assessment. Again, this would be very early stage. Then we move to a documented solution where we require a documentation package for the assessment by the GBA, and you've got all the documentation to support it. So again, this is pre-implementation, pre-coding. It's just saying if you want to assess at this level, we can look at your solution. And then validated means that you've proven it in some proof of concept. The solution demonstrates that it functions as intended. And then level 4 is the production. So it's viable, it's working in production. And then we have a final stage, which we call optimizing, where you're maintaining continuity of operations with consistent, reliable performance over a long period. And this means your use case may be applied to the same use case in multiple instances or multiple use cases. So looking at those layers, we actually assess it on 11 elements. And again, this is still the main blockchain maturity model. So you look at distribution, and this is assessment of risk. And an easy example would be, you may be decentralized in terms of your nodes, but if you're all on one, cloud provider, that cloud provider could go away, and so there's this concentration of risk. Governance, looking at how you effectively manage all the key components. Identity, that there's controls if necessary to maintain confidentiality or security in terms of logging in and out. Interoperability, the sharing in information with legacy infrastructure or other networks of the same protocol or other protocols. Performance, meaning capacity, throughput, speed, and that they're suitable to the use case that they're looking at. Privacy, again, looking at the encryption and security around personal identifiable information. Reliability is that the assurance that the controls address and mitigate the resolution of disputed forks, blocks, errors, or fraud. So this is the reliability of the protocol to produce an accurate distributed ledger. And resilience is that you're showing a sort of, you've got a fault tolerance in terms of nodes going down, but you've got continuity of operations. Security, again, this is about access and where you may have concentrations of risk, or you've got preventative measures to protect the network or the individual nodes. And infrastructure sustainability, which is ensuring that the resources that are required can keep going throughout the lifetime of the solution. And then synchronization. And often people talk about consensus or other things, but different solutions have a way. The really common thing is that you're synchronizing the data between the nodes. So how is that consistency and completeness, finality sorted through? So in the BMM, this is a very quick overview. We take a solution, you're assessing it at which level it's at, 1 through 5, and you look at these elements and you rate it 1 through 5. And then the overall rating is the lowest rating that you've got, but you've got a spectrum of ratings across these 11 elements. So that's the BMM as it stands generically for any any use case, any solution, and that's what we started with. So now this is the focus of what we want to talk about, is that if you're in the blockchain for fintech, banking and finance, here's the supplement. So the need for a supplement came out of that standards and certifications group and defined the original BMM, that we recognized that there was a need for other use cases to be considered, and there may be specifics within particular use cases. So we identified the spectrum of use cases which have unique or differentiating product, service, and functions. It could be adapted in the future. We've run it past a bunch of people and we've kicked the tires ourselves. But the idea is that when you're looking at a solution, we're hoping that you'll see, yes, my solution is in this use case, or it could be applicable to 2 or 3. But the idea is that aggregated in some logical form that it's relevant to where you're implementing it, both for the buyer, the seller, or the interested party. And against the use cases, we defined a set of requirements against which the use cases could be assessed. So unlike the BMM where it's doing layers against elements, we're just saying, okay, for these use cases, we believe these requirements are necessary or could be applicable or not applicable. And then it's just an assessment of do you meet the requirement or not. And again, we don't want to make it pass-fail. The assessment is a collaborative process. The idea is to help you justify the capabilities that you do have and maybe identify areas of remediation if for any reason the requirement isn't met. And I'm sort of saying this, the requirements represent a peak requirement, so will not be applicable in use cases. And we certainly expect, and although we've sort of given you a first cut at what requirements we think are applicable to the use cases, there's a process between the assessor and the solution to decide what is applicable. So looking at the use cases, and again, this may vary in terms of your experience, but we're just trying to break the entire financial industry and all its myriads of forms into sort of simple buckets. We ended up with 23. So we've got the idea of a value transfer business, and this may be, interest where people are actually, have rewards or, other forms of value being transferred in a simple form. Individual banking is like your retail banking. Private banking is where you're dealing with more wealthy people, so you can get involved with trusts or other investment vehicles. Institutional banking is usually between the big banks themselves, the big corporations, the big investment funds. Community banking is where there's more local banking, can also include credit unions. And then you've got into more esoteric use cases like micro lending and micro payments, where it may be implemented. Credit cards obviously is a big thing, and then we have debit or prepaid cards. Central and national banks, because they're looking at blockchain, and CBDCs are there. So we've got CBDC separate because there may be central bank initiatives that go beyond CBDC. Capital markets, which covers a huge amount of issuance and trading of debt and equities. You've got structured products where you're dealing with things like asset-backed securities. Obviously, from the financial crisis, people became aware of mortgage-backed securities, but there's various types of asset-backed securities that tend to have their own unique needs. You've got exchange-traded derivatives. These are the official exchanges that trade options and futures. But you've also got what we call OTC, or over-the-counter derivatives. So these can be derivatives that are agreed bilaterally between two parties and aren't necessarily transacted over an exchange. Retail investing, again, that gets into the whole world of mutual funds and other investment types, registered investment advisors. Institutional investing, where it could be pension funds, insurance companies, foundations, that are investing through fund managers and their custodians. Governments have a huge amount of money that they collect and distribute. Supranational bodies. Now this gets into the likes of the UN, the World Bank, the IMF, the Bank of International Settlements. And then we go into the new world, the cryptocurrencies. How do they work as far as being a financial banking and financial service? The central exchanges within crypto, and then you've got the DeFi or the decentralized exchanges. NFTs, everyone's become familiar with those, non-fungible tokens in the digital world. And then we've got peer-to-peer distributed apps, or DApps. So across these, and I'm covering them very broadly, we're trying to find where it's meaningful so that your solution may apply to multiple use cases, but or you may find a subset. So we could delineate this further, but this sort of covers the sort of spectrum of use cases that we're imagining people are putting their solutions into. So against those solutions, what are the types of requirements we need? And the requirements are sort of requirements are sort of built into sort of three main categories. There's a bit of a repetition with the BMM in terms of looking at what are blockchain functionality in terms of distribution and other performance requirements. But then we get into, there's the regulatory side, the accounting and audit side, the ability to account for positions correctly. You've got tax audit accounting, fractional reserve accounting. There's other aspects of this which are there. And then you've got some of the interoperability things. So those are sort of the general buckets, but we'll go into the specific requirements. You've got to have auditable records. You are going to be providing a distributed ledger to a financial use case. So it should generate ledger reporting to meet the general use case audit requirements, or at least the data to read write to that. Credit and risk management. These are in alphabetical order, so they're not necessarily logically put on. But when you're looking at something, it's ironic that most people forget that the registered exchanges for cryptocurrencies don't actually use blockchains for their own ledgers. They use normal general ledgers, and that's partly because the blockchains, some of the blockchains that are out there, they haven't been able to meet the requirements of that industry. But if you look at FTX, apart from the lack of internal controls and misappropriation of funds, there really was a lack of credit and risk management across the solution. And so this is a critical thing, that if you're borrowing and lending assets, you have to have this, either provide the information to provide credit and risk management or have it within your solution. Clearance and settlement. Well, this is actually reflecting settlement finality for executed transactions, because most blockchains are post-execution ledgers. So it's either facilitating that clearance and settlement and reporting it downstream to a ledger, or it's the primary ledger to do that. And it's not, most people think of transferring assets as I buy something and I receive it. But a lot of the transactions, particularly in the institutional world, and even in involve the lending of securities, or the borrowing of securities, or the financing, or the margin trading under leverage. So you have to have the ability to settle all those types of transactions, and particularly when you get into the derivative space, where it's future dated, parameter-driven payables and receivables. Confidentiality is a key thing. Particularly, people are very sensitive about the information, and they don't want people to reverse engineer any transactions, and they want to make sure their data is, so whatever solution you provide, it's got to provide the confidentiality as the same as today's, or better than current infrastructure. Digital security issuance is new things. This is, rather than issuing securities in the current way, and we can transact them electronically. The digital securities is saying you want to issue a security to a network directly and create a digital asset. So this is new ground, but that's one of the requirements if you're in certain spaces. Distributed ledger records is, the goal of this is to have the safety in numbers, not to have a central authority. And if you think about most of the use cases today, although you have multiple parties, they're usually clearing through their own dedicated central authority. The benefit of blockchain is to get rid of that inflexible central authority and make a consistent process across multiple use cases. Distributed settlement, again, the transaction is recorded without that need for the central authority, which I just described. Double entry accounting. This is a requirement for many use cases, because ultimately you're accounting for assets or money or other securities, and you have to be able to produce a ledger that meets GAAP or IFRSI configurability or compatibility. And this is, one of the areas which I think is one of the most significant ones, because most people think blockchain is a ledger, but it really needs to be reflected in double entry accounting terms. And the challenge you have is that if you have to take an algorithm to generate the accounting, remember the accounting is now not part of the immutable record, and technically the algorithm, the accounting output has to be reconciled back to the blockchain, and that raises other issues. Fractional reserve accounting is unique to commercial banks, and most people, when they hear about this the first time, they can't believe it. But most people understand that central banks can print money, but commercial banks can create money out of nothing, which is you deposit $1,000 into a bank, the bank reflects $1,000 as a liability against the cash asset. It can lend $900 of that, let's just say arguably on a simple basis, and someone else can now deposit that $900. So they've just created $1,900 where you started with $1,000. And this is the way commercial banks leverage up and create money. So it's one of those things that if you're running a commercial banking use case, you've got to allow for the fact that this fractional reserve accounting is part of the puzzle, and it happens within other lending scenarios as well. Future dated transactions and obligations. Obviously, the financial services is built around a lot of leverage or financing or loans, and those require future dated payable receivables. Again, this is a point where we've looked at some of the solutions where you've got a smart contract that wakes up and says, hey, I've got to do something today. That's fine as far as a transaction process, but you can't reconcile to it, you can't accrue to it, you can't project off of it. So in many use cases, you've got to build in the future dated transactions within the immutable record, as and when they're created, not when they're to be processed. High capacity, again, this is peak requirements. So in some financial services, they're low volume and high latency, but in many cases, they're high frequency transactions, processing of credit cards, high frequency trading or algorithmic executions have significant demands on capacity throughput. So again, when you're looking at your use case, capacity is a key thing. Identity verification, this is just part of the regulatory thing, so that your solution at least provides the means to be compliant through a downstream system, or can provide that compliance itself in terms of what you need to know. Knowing your clients, knowing your counterparty. And this is part of the problem with some of the DeFi protocols, which is although they operate usually outside regulatory boundaries or in light regulatory, that do you know your client? Do you know your counterparty? But within a regulated jurisdiction, this is a critical thing. Interoperability with legacy infrastructure. If you've got a solution, you can create a digital solution if it doesn't have interoperability with legacy infrastructure, then it has a limited utility until the whole thing is digital. So again, this is a requirement that you may want to consider. You also want to consider interoperability with other networks. Therefore, if two networks are running the same protocol, is there a requirement that they can interoperate with each other? And then interoperability between other protocols. Again, this is something that you may need to consider when you're looking at use case if there's multiple protocols. So again, we were looking at interoperability of these three different levels. Lending payable receivables, this comes back to the idea of the future dated obligations, but being able to truly reflect loaned assets and potentially collateralized ones. I think real-time settlement, again, there's some latency in some of the solutions, which may not be critical. And again, most transfers and settlements in today's infrastructure occur on a next day basis or 2 days later. So a lot of blockchains have brought that settlement into intraday, even if it's minutes or hours. But the idea of sometimes you need real-time settlement. And again, so whether it's applicable to use cases, that's an assessment you have to make. Reconcilable records. You're creating a ledger. So how do you prove that your trial balances or balance monitoring? How do you account for all the assets on your ledger? And there's accounting standards to do this. So you have to be able to meet those accounting standards. And again, you can't mix up accounting for balances as to saying my wallet service told me my balance was X. Your wallet service is a data inquiry function. It's not accounting for all the assets. And if the inquiry is wrong, the balance is wrong. Regulatory reporting and monitoring. Again, the solution can either have that built in or it provides the data to meet the regulatory reporting. And again, that's an assessment in terms of when you're looking at the use case, you're saying you can either feed the data to the application or you've got the information to provide it. Scalability is a big issue. We like to say linearly scalable because certain solutions tend to scale exponentially, which means they get slower as they get bigger. And again, when you're looking at this is a peak requirement. So if you're looking at large scale, you need to make sure you're linear scalable. What that means is that the computational power goes up by the same factor as the sort of volume of transactions. So if you need X computing power to do 100 transactions, you need 10X to do 1,000. In a nonlinear thing, it would be like X to do 100 transactions, but then like 100X to do 1,000, and that's where it gets exponential. So you got to do, if that's the critical thing for you, you've got to understand that. Tax audit accounting, again, unfortunately, you know, two certainties in life, death and taxes. How do you, and this is affected, there's been a lot of discussion because there's not a lot of specificity around crypto assets. But if you're handling legacy assets, the tax reporting requirements and reporting is fairly well known. So how does your solution accommodate that if it's required? Third-party legal responsibilities. This is some of the solutions can involve oracles or validators or other participants in the network. So do they have liability? You know, do they need powers of attorney? Do they need to indemnify the network? So again, looking at your solution within the financial services, everybody wants recourse. And this is one of the reasons why institutional regulated institutions have barely dipped their toe in the water of bringing their clients. Most of the bigger banks may allow their clients to buy and sell crypto assets, but that's about it. They're not allowing them to participate in DeFi or NFTs or other great things because there's no recourse in those public blockchains. So again, it's one of those things where you really have to take a look at what are your responsibilities. And a lot of these regulated institutions have regulatory responsibilities, or they have what's called fiduciary responsibilities. They're responsible for your assets. So if something goes wrong, you're allowed to sue them. So they're going to be very cautious about what they get involved with their own risks. Transactions and balances. This sounds pretty obvious, but ultimately you've got to be able to generate, sort of effectively your bank or brokerage or custody statements, or have the data to do so. So again, if you're running a ledger in the financial services, doesn't matter that it's distributed, doesn't matter that it's using a new form of technology and it's quicker than everything, it still has to do the basics. So I've covered this very quickly, but this is the matrix that we have in our sort of blockchain and supplement, which is showing against these use cases. Here are all the requirements, and we're sort of saying, okay, we definitely think these requirements are required. The A's are sort of saying there's an assessment for applicability, and not applicable means we don't think they're applicable. When we come to do the assessments, and we're in the process of defining this process, there'll be an assessment. So this isn't hardwired. This is just a guideline, so people can look and see and think where do they fit and what's required. And then if they want to say, I don't think this requirement applies, that can be agreed with them and the assessor. But the idea is this matrix. So where the BMM is sort of saying, we're looking at you in terms of which layer are you at versus these 11 elements. The process of the supplement is to say, what's your use case, what's applicable requirements, and do you meet them? And this is the process. So assessor and solution agree the use case is applicable to the solution's intended utilization. From the matrix as a guide, the assessor and solution agree the applicable requirements. The solution will be assessed as meeting or not meeting the requirements, and for any requirements not deemed to be not met, a series of recommendations for remediation would be made. So again, depending on how early you are, if you're just at the documented stage, you've got a chance to correct your design. If you're at the proof of concept, you've got the chance to enhance it. If you're at production, then you've got the chance to adapt it, because you might be in one use case where something's not required, but to use it for another use case, you need it. So again, it's sort of collaborative approach. So for more information and next steps, go to the GBA website. I'd be remiss for Gerard if I said, and please join. There's a lot of things going on in terms of the conferences, the events, the working groups, just the materials and access to training. join the banking and finance working group if you're interested. Look at the other groups as well. And what I said at the beginning, it's expert and learning resources welcome. We're not looking for, we love people who come in with knowledge and expertise to help with the group and its initiatives. But if you want to sit and learn, then that's fine, and you can provide a perspective as a layperson. The standards and certifications group, which generated the BMM, is another possibility. And there's many other working groups out there covering different use cases if you're interested. But the reason this one's more interesting is if you're dealing with healthcare, if you're dealing with voting, if you're dealing with supply chain, although those use cases definitely have their own unique aspects, ultimately, most of them end up with some form of financial transaction. So if you want to expand your use case from a particular discipline into the financial services, it's important that you understand the banking and finance requirements. You can look at the documents, the training, and the event pages. If you want to become an assessor, I have the trouble of, although I'm sort of technically qualified to be an assessor, I've got a conflict of interest because I have my own solution. So, you know, I don't assess anybody who would look like a competitor to me, just to reassure you of that conflict. But I can provide guidance to the assessors on a generic or general basis. And you can inquire about having your solution assessed, or if you're a buyer, have that solution assessed. There's two links here, and I'll try and put them in the chat at the end. One is the general maturity model, and the other one is to the maturity model supplements. And that's where you can see this, the document that outlines this supplement. And that is it.
And Paul, we'll also put this video up on the GBA YouTube channel. So if you go to on the GBA site under, I think it's news and information, there's a link to videos. So you'll see we have about, I think, 287 videos there currently. Yeah. And if you want to just stay informed, and you're not a GBA member, I don't know how you get out of bed in the morning, but I think under news and information, there's a newsletter section. You can sign up for the newsletter to get free updates. I got to drop off in a minute. The one thing I would encourage everybody is if you haven't done so already, if you go to the gbaglobal.org site, under resources online training, and I'd encourage everyone to take the Blockchain Foundations course, because the Blockchain Foundations course is a prerequisite to the BMM course and all the other courses, because we want to make sure that as we as a community go down the road, that we have a consistent understanding of what blockchain is, what the terminology is, how these pieces fit together. And we're hoping that this foundation, and it's free for anybody in government. So our goal is to get everybody, and we keep hearing that we have to get government educated on blockchain. Well, we've created a free course for anybody in government to understand what blockchain is. And if we can create this as basically a common understanding, it'll help all of us move forward together. So it's a little bit about that. Guys, I got to drop off. I got another call to go to. Paul, thank you again for everything.
Thank everyone for attending. This is a good group. Hope it was useful. Okay. Thank you.
Thank you. Thank you.
Thank you, Paul.
Thank you, Paul.
Thank you, everyone.
Thank you, Paul.
Thank you, Paul.
Thank you. Bye.